given the nature of the business, but he would buy preferred shares on an exceptionally high fixed dividend. This deal was the start of a pattern of investing in preferred stocks. Salomon in 1987. Salomon, Brothers or Inc., was a creature of and helped create modern Wall Street. Indeed, so typical of the breed and so dominant did it become in the 1980s, that if Hollywood had wanted a model of a hard-bitten, tough trading scene with flaws of masters of the universe take no prisoners dealmakers, then Salomon was the place to go. It had always been a dealmaker, but the early days were much more about steadily building long-term relationships and a reputation for integrity. Before the First World War, it had a modest business arranging loans for Wall Street securities brokers and dealing in bonds for financial institutions. Its big break came during the war when the government invited Salomon to market some of the large number of bonds it was selling. Its corporate bond underwriting business was expanded aggressively in the 1960s, as it gained a name for taking significant risks upon itself to ensure companies walked away with the promised cash. One example of extreme risk was the underwriting of $76 million of convertible preferred stock for a small insurance company in 1976. This company was Geico. 8 Wall Street institutions had already turned the company away, thinking it was destined for complete failure. See Investment 1. Buffett admired the way that John Goodfriend, then second in command at Salomon, was willing to put the firm's reputation and money on the line to guarantee that Geico got the full $76 million.